this, do that, do this. I got to get the screen right. Not quite right. Hold on. Almost got it. Almost got it. Just slide over a tad. There we go. Block. And there we go. And we have it. All right. So YouTube should be going now. For those you don't know, I do have a YouTube channel. Oh, I got 3 of them. I got 3 YouTube channels going at the moment. This here, this screen, is live on YouTube now. So if you cannot see these small numbers here, you will be able to see them on YouTube. So that being said, let's keep on rolling. All right. A 35 should be over 2%. Okay. Now, KG wants to take a look at Campbell's Soup first thing this evening. Campbell's Soup. All right. Let's take a look. CPB. I'll try it one more time. Interesting. Now, you're going to see I do the same things over and over and over again. Well, it kind of works, so why mess with something that works? First thing I always want to do, I want to look at the 1-year chart, and I'm looking for 5 things. Number 1, the high. Number 2, the low. Number 3, where was it? Number 4, where is it? Number 5, where's it going? Up, down, down. What's going on here? Now, all the way over there is a year ago, and all the way right here was Friday. So we get to see exactly what happened in the last couple of weeks. And that's going to give it, see here, the 1 year gives us a couple important things. Number 1, where's the height? Number 2, what direction is it currently glowing? What direction is it currently going? It's going up, then it's coming down. All right, fine. So it's currently at 34.48. That's the last price that was traded, 34.48. So what we're going to do now is take a look. Now, I do what's called a covered call. And the reason why I do a covered call on dividend stocks is because consistently, a dividend stock that has consistently increased its profits year after year after year, they have a tendency to do the same thing year after year after year. So if we see this here, okay, here's the high, the low, that's the range of the year, the high and the low. Okay, if you're not ready to buy a stock at 52 and have it drop all the way down to 34 and not panic, good, you're good to go. If you do panic, if you buy it at 52 and it drops down to 34 and you panic and sell it, you shouldn't be playing this game. Stocks can and do fluctuate up to 50, 60, 70% in the year. A high of the year, a low of the year. They go up, they go down. That's all stocks do. If you take a close look, up, down, up, down, up, down, up, down, up, down, up, down. That's all they do. If you time it right. Now, I know it sounds like a lot of effort, but it's not. This was created for a 9-year-old. A 9-year-old. My daughter was 9 years old, and she wasn't a Mensa student. Okay, it's just a regular, average, everyday 9-year-old girl. What she wanted to do, what Daddy was doing. So I had to create a strategy specifically for her. When it goes up, great, we sell it. When it drops, we start buying. It's not that difficult. So let's take a look at Campbell's Soup, see what it looks like. So if I'm going to do a covered call, and it is 34.50, 34.48, I'm going to look at the 34.50s. Well, they don't have a 34.50. Well, I'm going to have to look at the next closest one available. My head says 1% of $35 is 35 cents. Now, it's a long way away, okay, because we're only at 34.48. So let's go to the 34. But if we go to the 34, we've got to subtract that right there out of it, 50 cents. So the 34 is going for 75. You take the 50 cents out of it, you walk away with 25. Terribly sorry, dude. Campbell's Soup, the numbers just don't work. Terribly sorry. So it's going to be a no. And I don't even have to look at the rest of the chart. So let's keep on going. You guys come up with ding. KG got that one. Bump, bump, bump. James, Linda Owens got that one. Got that one. Got that one. John Ashton Martin got that one. John 3500. Good evening. Tick Patty Trading. All right, Tick Patty, what's going on? Challenge Yourself. What a cool name. John Ford. Good evening. Cody. Dylan. Harasa. Good evening. Tio. 10 win. All right. KB. KB, are you on both channels, dude? No, that's KB and KG. Oh, wow, that's going to get confusing quick. All right, so KG, sorry about that. The 35, dude, you got to check out those numbers again. Because you're buying it at 34.50, and the 35 is not going to get you 2%. Take a close look. Dr. G, Coach Wortman, Lightning, what's going on? Joe, Santiago, Teddy, Greg, Andrew, Annie, good evening, Annie, Noah, Jim, okay, Jim Leone, Joseph, Barry, good evening, Galaxy, Scott, oh wow, all these people here, ASAP. Is eating glue every day a bad thing? No, not at all. You have at it. Keep going. Uh-oh. Scotty Young, good evening. Teddy wants to take a look at Johnson & Johnson. Now, unfortunately, Teddy, you're going to find the same issues with Johnson & Johnson as you do with Campbell Soup and a couple other of those elite companies. The current price, $155. The $155 is going for $143, not 1%. Terribly sorry. Now, I do like Johnson & Johnson. I do. They're a dividend king. They've been in business for over 100 years. If you're okay with less than 1% a week, fine. I think I bought Johnson & Johnson once in the last 20 years because the numbers just don't work. Teddy, I have your full screen. Thank you, Teddy. Nader Riley, MPW. Nader Riley, MPW, really? Now, I do have some MPW. Only because the numbers look good. That's it. All right, here we go. MPW. The high, the low, where was it? Where's it? Look at this. Up, down, up, down. Here we are right here. 454. We're looking at the 450s. The 450s are going for 11. Now, I don't know about you, but quick math tells me 11 is more than 2%. Well, 2% a week is over 100% a year. But just because it's 2%, and that means that's a nice return, does it tell us it's the right time to buy? Well, that's right here. We're going to look into that a little bit closer. Now, the reason why I want to look at the 90-day, the 1 year, and the 30-day, and then the seasonality, because each one tells a different story. I think that was Rod Stewart. Correct me if I'm wrong. Rod Stewart back in the, I think it was late 70s. Every picture tells a story, don't it? Anybody know that? No? No? Okay. All right, so here we are. Let's take a deeper look. We know the numbers work. Great. Let's find out. A year ago, MPW is right around 517. High of the year back in mid-September, 656. The bottom, 350. That is almost a 50% drop. Remember I told you? 50% drop. From the top to the bottom, almost 50%. Okay, so from there, in the beginning of January, 351, she shoots back up to 630. Almost, can you see that? A 50% drop and then 100% increase. Well, that's freaking awesome. Think about it. 100% increase in a couple of months. 635. All right, so from there, from that 635, look what happened. High, low, where was it? Where is it? Look at this. Up, down, up, down. Now it's going sideways. Okay. Now, like I said, I do have some MPW because I like the numbers. I like getting 2 or 3% every single week. Some stocks give it to me, some stocks don't. Now, I don't do very many REITs. I don't. Only ones that make sense and are cheap enough where it's not that big a deal. Okay. Last 30 days. We're looking at the 8th, so we want to go back to 5.8, which would be right there. Look at that. Here's the last 5.2, jump up to 5.35, drop down to a little less than 4.4, and then we have a couple of down days and an update. Not quite clear as a bell, but look at this. Last Tuesday was the bottom. Wednesday was higher, Thursday was lower, and Friday was higher. So it is kind of going up if you like MPW, and that's always a big question. So let's do a quick covered call on MPW. Well, I don't know. I'm going to let you guys. That was one pick. I forget who came up with that one. Okay. So, Nader Riley, MPW. MPW. That's going to be our first pick of the day. First pick of the week. Okay, so if you're taking notes and trying to follow along, we're going to do MPW if it passes the seasonality test. Well, seasonality, basically, January 1st to the far left, December 31st to the far right. The blue line represents the movement for this year. The red line represents movement over the last 10 years on average. It just gives us a good idea of what we think. It's kind of like driving down the road with a navigator, or what do you call that, on your computer. Well, this is the way it should be. Doesn't mean it's going to be. I don't know about you, but every once in a while, the navigator sends me in the wrong position, but that's okay. Here's where we are now, this blue dot. That blue dot was actually Friday. That was the last trade on Friday. So what usually happens right here with MPW? Well, let's zoom in. All right, so here we are here. Okay, look at this. It's going to go up a little bit, sideways, down, and sideways. Now, I'm not sure about you, but if I want to get this for just 1 week and see how it fits, look at it. It's going to go up for the next week. Well, alrighty then. Let's see how that plays out. All right, let's get rid of this. Right to there. Whoops. Let's change it back to the regular one. There we go. You can walk through it slowly. And if you're curious, what I'm doing right now is being recorded on YouTube. So if afterwards you want to go take a look, you can rewatch it over again. Okay, so we're currently 454. I want to do the 450s. This is what I want to look at first. I want to change it to the strategy that I'm looking at. Now, there's a lot of strategies out there. If you don't know what they are, well, how are you going to do them? Well, Thinkorswim. Now, I don't get any money from Charles Schwab for this, but Thinkorswim is a Charles Schwab trading platform. Okay? Now, Charles Schwab does have their own trading platform. This one, Thinkorswim, they bought when they took over TD Ameritrade. So this kind of came with it. Package deal. But this is all the trading strategies there are that you can do with options. I'm only going to show you one because it is simple, it's safe, it's predictable. All right? So, and it's called the covered call. There are literally hundreds of videos available on YouTube, Vimeo, or whatever channel you watch videos on explaining the covered calls and how they work. But interesting thing about the covered call, it is such a safe trading strategy that you can do it in your trading account, in your IRA. Some trading strategies you can't do in your IRA, but the covered call you can. It's actually a very safe strategy. And I'm going to show you something. When I say I want simple, what do you call it? Getting old is not as great as people think it is. Simple, safe, predictable, consistent. Simple, it's one of the simplest strategies out there. Safe, it's one of the safest out there. Predictable, I know exactly what I'm going to make. I shouldn't say exactly. I know extremely close to what I'm going to make before I even do the trade. Most people have no clue. Most people just buy a stock and wait for it to move. I don't care if it moves. What I care about is, am I getting my 1%? 450 is right here. All right, so I'm going to click on that and see what the numbers look like. So 450 right there. Here we go. Now, I'm just going to do one contract so you can do the math yourself. This will give you an idea that you probably should have paid attention in math class in 8th grade and 9th grade, because it's just simple algebra. Okay, you know, if one's going to cost this, if you're going to make this much profit for one, well, 2 is going to be twice as much. 3 is going to be twice as much. And if you're going to afford to do 4, 5, or 6, well, that's good. What the hell is that number? That don't look right at all. Let me just tell you a little bit before we move further. Now, let's get out of that one. Okay. These numbers here, okay, they're not moving at the moment. When the stock market is open, 9:30 in the morning until 4 p.m., all these numbers change every 2 or 3 seconds. Now the numbers we're seeing now are left over from last week. So first thing in the morning, all these numbers are going to change, but the math is going to be the same. The equation is going to be the same. All right, so just follow the steps. What am I paying for? What am I selling? How much am I collecting? Is it 1% or more? If it's 1% or more, great. 1% every single week is over 50% per year. It's really not that difficult. So these numbers aren't that great. Yeah, I can't do these numbers. Look at this. 6, 6, 6, 6. There's no possible way all those can be 6. 435, 436, 435, 4... Yeah, those numbers aren't right. It's hard to come up with numbers when they do that. I hate it when they do that. They do it a lot. But anyway, besides the point. If we're going to do that, the numbers aren't realistic, so I can't give you a good number on it. Now, I'm going to apologize for that, because that's out of... John, 3500, how you doing? Cody? Hadassah, good evening. Tio, what's going on? Tenwen, good evening, good evening, good evening. Crown Castle, good evening. Melatonin to dividends, first move. Okay, JK, I'm not 100% sure how to interpret that question, because I'm not 100% sure it's a question. Because 60K into dividends, period, first move, question mark. Is that a question? Lone Wolf, dude, I haven't seen or heard from you in a while. How are you doing? Okay, so JK, I read each and every individual question. You want to spit out another one with a little bit more details? I might be able to answer it. 60,000 investments in dividend stocks can bring $600 a month. Hypothetically speaking, that's for 4 months. Okay, so look at it this way, JK. Percent every single week. Well, you should do the math. 6,000 multiplied by 52 divided by 12. That's monthly. If you want to do it weekly, 60,000 a week at 1% should be 600 a week. What do I like this week? CP, we're going to get into that in a couple of seconds. Boogeyman, I do the same thing. They don't get it for 10 years. Boogeyman, I'm not 100% sure what you mean by that. Okay, but I'm going to be here all night if you want to explain it differently. Okay, Mama's Money Makeover. Gotta love that name. Haphazard, good evening. Glad you got time with your family. Yeah, I had fun. Let me think. I didn't see my mother this weekend, although I was at my mother's house. Did a little bit of landscaping, planted some trees for her. That was nice. Got to see my grandson, hang out with him. Got to see my 2 boys. Got to see my son-in-law. But I didn't see my 2 daughters. But for the most part, I had a good weekend. What time is your meeting tomorrow night? Same bat time, same bat channel. Amador Ramirez. Que pasa, amigo? SCHD, double no. Triple Q, triple no. Okay, I don't know why people like those. But, you know, I get it. I do. They're all ETFs. And ETFs, in my humble opinion, are for those people that don't want to do the work themselves. And there's nothing wrong with that. Seriously, there's absolutely nothing wrong with it. You want to put your money in SCHD? Great. You want to put it into the Qs? Double great. BTCI, never heard of it, but hey, you do what you think is right. Okay? I don't like any of those specifically because the numbers for me just don't work. So for the fun of it, Finance with Professor X, let's check this out. All right? So what we're going to do is we're going to go over to Yahoo Finance. Here we go. Yahoo Finance. And we are going to put in each and every individual one of them. BTCI. Okay. So, BTCI. All right, here we go. Now, what we're looking at here, I tell everybody, if you're going to be investing, you need access to financial information. Where you get it, well, that's up to you. I use Yahoo Finance. Okay, I find it simple, easy, and I've been using it for over 20 years. It works for me. So here we go. BTCI, NEOS ETF Trust, NEOS Bitcoin High Income ETF. Okay, first of all, it goes with Bitcoin. I love listen closely. I love the idea of Bitcoin and cryptocurrency. But at this moment in time, it's not safe. It's not predictable. There's no possible way I can get weekly income from any cryptocurrency unless I'm willing to sit in front of my computer for hours. No, thank you. That doesn't work for me. Until Bitcoin and all those cryptocurrencies have a safe way of any cryptocurrency. Here we go, BTCI. All right, I want to look at the dividends only. All right, so I'm going here. It says historical prices. I want to click on that, and I want to look at dividends only because I'm looking for cash flow. I'm not looking for capital appreciation. There is a huge difference between the two. So let me give you a quick idea if you don't understand what they are. There we go. Maximum amount. Oh, lovely. I'm going to invest my money into a company that is 1, 2, 3, 4, 5, 6. 6 months old? Seriously? Seriously. Okay, Professor? Okay, Professor X. 6 months. That's it. All right. So, let's see. 148, 157. That's great. That's a nice increase. Well, the very next one, 143. That went down. 1 month up, 1 month down, 2 months down, 3 months down, 1 month up. Explain to me in a manner, Professor. You should be ashamed to have your name Professor after that. 6 months, and 2 of them are up months, and 4 of them are down? How can you honestly say that that is good? I'm kind of curious. And it's not even a year old. Most companies don't make it to 3 to 5 years. And you want me to put my money into this? I'm going to say no, but thank you anyway. SCHD. I can guarantee it ain't any better. SCHD. Okay, so the dividend history for SCHD. Come on. All right, I want to see the maximum amount of dividends. All right, here we go. Well, SCHD, how far back? This one goes to 2012. 2012, that's only 13 years? Okay. Well, 13 years. Let's take a look at those numbers, shall we, Professor? 6.9, 8.6, well, that's good. That's up. 7.7, that's down. It's going backwards. How can you say it's a good investment if the profits are going down? All right, hold on. That's 1. 8.3, 8.4, 9.1, 10, 9.0, that's down 2 times. 9.9, okay, wait, 9.9, 11, 8.7, there's 3 times. 16.2, 18, 18, 17, there's 7 times, or was that 6 times? Whatever. But 6 times it went backwards. Now, correct me if I'm wrong. Okay, seriously, anybody who wants to correct me if I'm wrong. When consistency of profitability, shouldn't it be 1, 3, 5, 7, 13, 15, 18, 27, 29, higher and higher and higher. Not up, down, up, down, up, down. No. Now let's look at the Qs. Is that QQQI or QQQL? I don't know. Let's find out. QQQI. Okay, NEOS NASDAQ 100 High Income ETF, $51. Well, let's check out all those dividends. Okay. Wait. Years old. What are you doing? Do you let toddlers drive your car? Seriously. Okay, anyway, let's take a look at the numbers. All right. February 2024. 59. 60. All right, they're off to a good start. 58. That's backwards. 61, 62, 61. That's twice. 64, 60. That's 3 times. 61, 61, 62.2, 62.4, 61. There's 4 times. 58. There's 5 times. 53. There's 6 times. Okay, so Professor, I don't understand what you teach and what you're a professor of, but I kind of hope it's not economics or investing. Each three of these that you showed, well, not one of them's over 20 years old. Okay, the oldest one you got is SCHD, it's 13 years old. Okay, profits go up, profits go down, profits go up, profits go down. How can you seriously tell me those are good? I don't get it. Explain it to me in a manner in which I'll understand. But hold on. Let's see if it gets worse. Hold on. Let's look at the summary. Because the summary, right over here, the summary will give us detailed information of how it has performed so far this year and how does it perform on a consistent basis. So let's check it out. Summary on QQQI. Give it a second. It'll pop up. There it is right there. Okay, so this isn't really that bad. Negating the fact that it's only not even 2 years old. 14.55% yield. Okay, that's not hugely bad. But look at the year-to-date total return, 3.6. 3.6. We're almost halfway through the year. And this thing's only done 3.6. Okay, hold on. Let's check out SCHD. SCHD. Give it a second. It takes a while. Here we go. SCHD. Are you shitting me? Really? 3.97? Yield? 3.97. But look at the year-to-date return. Negative 1.99. Come on, Professor. What do you got here? Last on the list, BTCI. BTCI. Okay, Bitcoin ETF. Well, what? There's no numbers here at all. Oh yeah, this thing doesn't even have any. Okay, I'm not even gonna go. That's a terrible thing to say. What I was thinking is a terrible thing to say. And mixed company. There's no numbers here whatsoever. Well, the company's not even a year old yet, so there's nothing to go by. But I'm kind of curious. Why do people put money into these type of ETFs? Now, don't get me wrong. For those who don't want to do it, they don't want to invest themselves, so they listen to what other people tell them. So someone's telling someone to put their money into this, and there's no history. Now, I'm 61. I'm retired. I don't have the luxury of being wrong. Okay, so yeah, I use dividend stocks. Yeah, they are boring. Yeah, they're monotonous. Yeah, it's repetitive. It's the same things over and over and over and over again. I love Ford. I trade Ford 4 or 5 times a year. General Motors, same thing. IBM, AT&T, Procter & Gamble. Companies that have been around for more than 5 decades because they have a history. I love history. Because if you give your money to someone who's only been in business for less than a year, well, how can you be reassured that they can do anything for you? Now, if there's a company that has been increasing their profits for more than 50 years, 5 decades, well, I feel a little bit more reassured, but that's me. A little bit more reassured about where my money's going. Now, for those of you that are still working, hey, some of these might be great. Because you have time to screw up. You do. And for those of you who have more money than brains, fine, do it. But for somebody like me who relies on the income that I make on a weekly basis to be able to pay my bills, I don't have the luxury of being wrong. Terribly sorry. I do not pawn off stuff that does not make sense. If they're not consistently profitable, no thank you. If they're not at least 20 years old with 20 years of increased profitability, no thank you. If they don't have weekly options, no thank you. It's a very simple rule for me, all right? I like companies that are consistently profitable and have weekly options. I have 2 criteria and only 2. That's it, just 2. 20 years of increased dividends or 20 years of increased profitability and weekly options. That's it. 2 things. That's all I'm looking for. And it works for me. It's been working for me for the past 15 years. And I'm pretty much okay with that. I come from an age group called Gen Xers. I don't know if some of you guys are in this group. Well, we have a belief that if it ain't broke, don't fix it. If it's working fine, leave it alone. And that kind of makes sense, doesn't it? If it's working fine, leave it alone. All right, let's move on. That's my little rant on ETFs. Now, don't get me wrong, some of them might be good, but I don't know of very many ETFs that have 2 decades of profitability behind them. Now, for those who don't want to do this, great. One of them was paying 14%. Awesome. The company's a year and a half old. Are you okay with giving your money to a company that is 1.5 years old? That's like giving the keys to your Lamborghini to some 16 or 17-year-old. Hey, you just got your license? Great. Here, take the Lambo out for a ride. Yeah, no thank you. Not for me. All right, so let's keep on moving on. Ton KS. Good evening. All right, yeah, baby's in the house. What's going on? All right, so what do we have here? All right, finance with Professor X, week. I have no idea what week means, but okay. Haphazard, thank you. Thin friends, dude, I told you to give me a buzz. Send me a text. Send me something. I want to chat with you. I want to show my aquarium. I do. You're going to love it. I used to make aquariums for museums and public aquariums and hotels, resorts, and very rich people. You believe that some of the aquariums I've made in the past. But mine is pretty cool. Skip, can you look at Ford for me, please? Oh, Skip, I love Ford. Ford. All right. There we go. Ford. Let's go back to here. And let's look at Ford. Now, when I look at a chart, it takes me 3 to 4 seconds to size it up. Because what we're looking for is so quick, so simple, so easy. You should be able to look at a chart and within 3 to 4 seconds to know whether it's not something you want to look into deeper. Well, number one, it has to be a good company. It has to have some history behind it. It has to have something that makes it appealing. Well, Ford has been around for over 100 years. They're the only company that didn't take the bailout money when the government was giving it to whoever needed it. Anyway. Now, I'm going to click the button. Do yourself a favor. Really quick. High, low, where was it, where is it, in what direction is it going? And if it passes those 5 quick tests, 3 to 4 seconds, then we move on to the next. You ready? High, low, where was it, where is it? Look at the direction. Up, down, sideways, down, up, sideways. Okay, 1026. That was like 3 or 4. Okay, so the 1050s are going for 5 cents. No. Okay, the 10s are going for 30. Well, if it's going for 1027, I'm only getting 30 cents. I'm walking away with 3. So, terribly sorry, brother. The numbers just aren't looking good for Ford. Now, tomorrow, when the market opens, all these numbers are going to change. So it might be a different story tomorrow. But rather than spending a lot of time looking at the chart, well, it's 3 to 4 seconds, those 5 things, and then do the numbers work. What am I buying it for? What am I selling it for? Is it 1%? No. Why waste any more time on it? Now, don't get me wrong. I have bought Ford plenty. 3 years ago, Ford was my top producer. Not last year and not this year. Don't get me wrong. I still look at it every week because there's always that chance that it could be because the numbers change every day. One day it is, one day it isn't. Just not today. What else do we got? Skip, we looked at Ford. All right, Finn Friends, what's up, my man? Cool. Versus jobs. I'm also in Florida, my man. Cool beans. Now, I'm thinking, this is just an idea, okay? I'm thinking of going to the Boca Raton area in the next couple of months. If anybody wants to come hang out in Boca Raton area, send me a DM and we'll chat about it. Okay. What are we invested in? Finn Friends, we're just getting started for the day. How is everyone tonight? Cool. Okay, Fin Friends versus Jobs, pretty rough day, but happy to be here with Mr. Dividends as well. Never heard that one before. All right, Fin Friends, I'm sorry to hear, my friend, but I am debating between index and Roth. Okay. I always liked, versus Jobs, I always like to put my money into either a corporate account or a trust account or a family foundation. One of them. That way you're doing good. Steven! Coles, love it. Ford, no. American Airlines, we'll take a look. Steven, I own some Coles. So let's take a look at Coles. KSS. Oh, how about I click on it first? KSS. Ooh, look at that. High, low, was, is. Look at the direction. Down, up. Well, that's a good one. Now, you may think it's not, but hear me out. The high of the year is a little at 25. The low of the year is 6. That's a 75% drop. Now, I own Coles, and it's a very nice cash-producing asset for me. Well, I didn't buy it way up here. I got it down in this area. Because you cannot buy any lower than the low of the year, which is right about here. Okay? Now, you've heard it all the time, buy low, sell high. Well, if the low of the year is here, wouldn't this be a good place to be looking? Okay, so that's the 5 things we looked at. Great. Now, next, let's take a look at the numbers. Does it make sense? Well, it's currently going for $8.96. The 9s are going for 15 cents. Well, right off the top of my head, I know that's 1.5%. Because 1% of $9 is 9 cents. Well, if $9 is the purchase price, it's 1% a week is 50% a year. Well, 1.5% is somewhere around 75 to 80% for the year. I don't know about you, but that sounds good. Okay? But do you like this company? And is it the right time to buy? Because we haven't looked into this deeper yet. See, I just like looking at the first 2 or 3 seconds. Okay, great. Now look at the numbers. Okay, great. Now we know the chart looks okay. The 1-year chart looks okay. And the numbers look okay. So now what I want to do, I want to dive in deeper. Is it the right time to buy? So let's find out the details in the numbers. It doesn't make sense to look at the details of the chart if the numbers don't work. Okay? So the numbers work great. Chart, 1-year chart looks okay. So let's dive in a little deeper. Here we go. Gonna need the glasses. Did buy some Coles at 22. I do. I own some shares at 22. But here's the thing. As it's dropping, I dollar cost average until my dollar cost average is a lot lower. All right. So yeah, I do own some at 22. So yeah, it does happen. I'm not used to talking so much. That's what the tea and honey's for. All right. All right. A year ago, 22.93. The high of the year, the end of June of last year. So I've actually owned this stock. This is the longest I've ever owned a stock. A year. I originally jumped into Coles last year at 22. Well, now it's down to 8.75. But I did dollar cost average all the way down. And don't feel sorry for me. I do make over 1% every single week on my Coles. Because if I didn't make 1% every single week, I wouldn't still have it. I would have gotten rid of it. But no, it's very profitable for me. So let's take a look. All right, the bottom of the year, $5.99. Well, from the bottom, look at where we are now. Okay, here's the bottom. Okay, in the middle of April. Up, down, up, down, up, down, up, down, up. Okay, cool. Where are we now? Okay, so 30 days ago, 5.8, right about there. Okay, here's the last 30 days. What do you think? 30 days ago, here we are. Up, down, up, pull back, and now up. Okay, 8.75. Is it going to keep going up? Don't know, but let's take a look at it. The 8.75, we're looking at the 9s. So let's look at Coles as the first one this week. I had a pencil and an eraser. KSS. All right, Coles. All right, let's get rid of that. Wait a second. February, all the way down to October. Slow. And then the fourth quarter, she shoots up. Okay, well, where are we now? We're right about here. So what's happening there? Let's zoom in. All right, well, here we are right here. She's going to shoot up a little bit, and then she go a little tiny dip, and then side. And slide on over. I just move it on over. All right, so at this moment in time, this is what the numbers are. Now the numbers will change tomorrow morning at 9:30 when the market opens. All these numbers will change. But the math equation stays the same. What am I buying it for? This is more than 1.5%. So let's actually do one. All right, change it to single. Covered stock. There it is. The 9 is right there. All right. Now, we are just going to do one contract, and then you can figure out how many contracts you can afford to do. Okay? And this, listen closely. Before you press the button, send, which sends it to the market maker to fill the order, read it out loud, because every once in a while, you're going to hit the wrong button, and this is not going to sound right. So always read, don't just read it out loud so your eyes can see it and it sounds different. Buy one covered call, Coles, KSS 100, that's the weeklies, 13 June 24. They can do whatever they want between now and Friday. And what do I got to do? Absolutely nothing. I can't sell it. They're asking me on one of these channels if I'm a human. Anyway. $9. I'm buying it at $8.90, $8.75. Current price, oh, sorry, $8.75, $8.96. Okay, which is 41 cents per. Sorry, $41 per contract. So one contract, 41. Two contracts, 82. Three contracts, so on and so. Was it 123? Something like that. Okay. Find out our rate of return. We are going to need our calculator. Calculator. All right. Now, to find out your rate of return, you take the profit. Max profit, 41 bucks. You divide it by what the investment costs. Well, this investment is costing, cost of the trade, including commissions and fees, $8.59. So let's do the quick math and find out what it comes to. 41 bucks divided by 859 comes to a grand total of, holy cow, 4.7%. Now, if 1% equals 1% a week equals 50% a year, 2% a week equals 100% a year, well, 4.7, that should be, hold on, let's see if I can get this in my head. I want to say 240, 250, somewhere in that area. Let's find out. Multiply it by 52, because there's 52 weeks in a year. 140, I was close. 148. I said 250. Sorry, 248. I said 250, but it's 248. 248% at 4.7% per week. Now, you're not going to get 4.7% per week. Every once in a while, you will. Now, look at it this way. That's just one position. All right. Let's go back to here and there and here. All right, so that's just one position. Okay, most stocks, all right, I have 7 accounts. I share 3 of them publicly. Most accounts I have anywhere between 6 and 10 different picks. 6 to 10. So I got to take whatever money I have and divide it up equally into all those. So that one trade right there makes 4.7. Okay, Campbell Soup is not making 1%. It's making, 0.8. Well, they kind of offset each other. If you like Johnson & Johnson and if you like Kohl's. It always comes down to the couple of questions. Question number 1 is, does it make sense? It either makes sense or it don't. Number two, do I like this particular stock, Kohl's? Number three, do I like Kohl's at this particular price? It's a yes or no. Now, I originally jumped in at 22. So yeah, I just might buy the 875 to lower my dollar cost average. I'm still making over 1%. I mean, this week, even though it's at 875, I will most likely sell the 950s, or I might sell the 9s. I'm not 100% sure. I don't know yet. I haven't done it yet. Yes.
So I looked up Kohl's on Dividend.com, and I don't see that they have increasing dividends. However, when I looked on Thinkorswim on the book value is very high, $35. So how, like, it's not quite following a rule, but it still seems very, attractive.
Okay, now I've been trading Kohl's for years. And that's probably the only reason why I'm still trading it. And I forgot to mention, and I apologize for not mentioning it, the dividends are great, and if they're increasing, great. But you also hear, what is the revenue per share on Kohl's? You got that handy right now? Earnings, revenue per share.
Okay.
You got to practice with that financial website of yours there. Okay, well let me pull it up on Yahoo on Yahoo Finance.
You said earnings per share?
No, I didn't. No. Revenue per share. How much money do they have coming in per share? And find out what the revenue per share is. Also, what is the earnings per share? Because earnings are different. Then, where is it? Profit margin. Ugh, that sucks. Return on ad dollars per share coming in. Okay, so the more shares you have, the revenue per share is lower. Okay, but the less shares they have, well, the higher the revenue per share. Okay, and the book value on this one, oh, look at that. The gross profit, $6.5 billion. All righty. Okay. Hey, thanks for the question. The book value, $33.74. That's $33.74 per share book value. Now, do you understand what the book value is? If the Supreme Court says to Kohl's, you need to divest and you need to pay off all your investors. Book value means everything and anything that Kohl's owns is put up for sale. That's the trash barrels, the pencils, the paper clips, the chairs, the computers, all that crap that Kohl's owns. It is on the, you can talk to any good bookkeeper or any good accountant. What do you own? What do you make? What do you owe? Call a balance sheet. Well, the balance sheet for Kohl's is $33 per share. So you're buying a company, $33 a share, but you're only paying like $8, $9 for it. That's one of the reasons why I like Kohl's. It's also one of the reasons why I like AIG, Bank of America, General Motors. Ooh, that's great revenue. Almost the same as this one. Ford, same thing. Great revenue per share, great book value, and the dividend's not that bad. 5.7 is the yield. See, forward annual dividend yield, 5.7% for Kohl's. Well, it's $8.76. Do the numbers. Look and make sure it will do a company that doesn't have increasing dividends or dividends at all. Well, because I do look at companies that are, I just started looking at Kathy Woods and what she owns. And we're going to take a look at that and find out why she bought some of the companies she did buy, and do they look appealing? Okay? So I'm changing my view on some stocks because some of the big heavy hitters, like Kathy Woods, like Warren Buffett, and there's a few others. I might even look at Ray Dalio's portfolio and find out why he owns what he owns. And does it make sense? Do the numbers work? And I can tell you right off the top of my head, Jasmine, MSTY, they're all, no, MSTY does not have what I'm looking for. Increased dividends, 20 years of profitability, and weekly options. I don't know if Misty has weekly options. Oh, I ran out of ginger tonight, so I just have green tea and honey. It's soothing for the throat, but no ginger doesn't help any. I don't know. We'll see. Great question. Let's move on. So we're going to put Kohl's down. Okay, I got to do this the right way. $8.76 is the price. $8.76. And if we do it, we're going to do the 9 call. And it's 4.7. 4.7. All right, so that's pick number one. You know, we're going to go over the picks from last week to see how they panned out. We're going to do that in a little bit. That being said, let's keep on keeping on. All right, so Jazzman, sorry, MSTY just doesn't work. What stock is this? Hey, Lord Detroit, Kohl's, KSS. Haphazard, thank you. Santos, good evening. Laurie, how are you today? Steve Martinez, 1% a week is more than most banks give for the year. Okay, I know that. Trying to be positive. So that's a no. Trying to be positive, I'm not quite sure what that's a no for, but if you elaborate a little bit, you got to remember, I get 7 different channels going. So you may think I know what you're talking about, but I can guarantee you I don't. Okay, so you got to give me a little bit more than so that's a no. Because I have no idea, so that's a no to what? Because when you put that question in, well, I had all these other questions going other directions. I'm not quite sure what that was a no to. All right. Benjamin, hello, James. What you take on Apple calls for the week? Okay, Benjamin, let's take a look at Apple. Now, Benjamin, I don't buy options. I only sell them. Okay, so, actually, this looks pretty good. See? 3 to 4 seconds. It looks pretty good. High, low, is, look at this. Up, down, up. Okay, simplified. Don't make it complicated until it's time to make it complicated. There was a great quote about Muhammad Ali. I don't know how many people know who Muhammad Ali is. Have you ever seen him fight? Well, Muhammad Ali, when he gets into the ring, he's all loosey-goosey. He doesn't do anything. He's saving his energy for when he needs it. Okay, so if the opponent is, on the other side of the ring, he's all relaxed because he doesn't want to use his energy until the person's in his space. And when he's in his space, he's ready to go. Well, the same thing here. I don't want to look at something unless it's the time in order to do so. I forgot where I was going with that. Don't get old. It's not as much fun as people make it sound to be. So I like the movements here. Okay, a year ago we're at 190. The high of the year 260. That's a nice move. That's a $70 move. That's nice. Well, from the 260 it dropped all the way down to 170. That's a big drop. Okay, but from there, we're now at 203. 204, let's call it 204. But look at the motion right here in the last couple of weeks. That looks pretty good. Now, Apple is not originally on my personal list. But the reason why I buy and trade Apple is because it's on Warren Buffett's list. That's it. Because Apple does not have 20 years of increased dividends. It doesn't. You'll see some of the stocks I invest in don't have 20 years of increased dividends, because they are either on Warren Buffett's list, Kathy Wood's list, or someone else that I admire's list. Someone who knows more than I do. Okay? I like safe, predictable, consistent. That's what I like. Okay? But there are people out there that know a whole hell of a lot more than I do. Okay, so if it's good enough for Warren Buffett, it's good enough for me. Apple was not on my list, but it is on Warren's list. So let's take a gander. 203.92. The 204s, they don't have any 204s, but they have a 205. And the 205 is going for 3. Well, if I buy it at 204 and I sell somebody the right to buy it from me at 205, Well, I'm making $1 on the stock movement, and I'm making over 1% on the option movement. Well, that's kind of like a no-brainer, especially when you're seeing this. The bottom's here, and we're in an uptrend. We're going to zoom in a little bit closer because that looks good, and this looks good. So let's go to the next level. After we do the chart, the 1 year, high, low, all that kind of stuff, the numbers all working great. Let's look a little deeper. You ready? A year ago, we were at 193. The high of the year was end of December, 260. Well, look what happened here. Here's the bottom right there on the 8th of April. 169.21. Okay, 169.21. Shoots up, pulls back. Up, pulls back. Now it's on an upward trend. You can argue, complain, bitch and moan, whatever you want to call it, as often as you want to call it, all that blah, blah, blah stuff. Here's the last 30 days. To me, that's plain as day. 30 days ago, we're at 194. Shoots up to 214, pulls back to 193. Now she's at 203. It's definitely up, down. Now it's going back up. Well, how far is it going to go up before she turns around and comes back down again? And what do you plan on doing? Or your goals. And what are your goals? What are you looking to get? Me, I'm just looking for 1%. Now, I like Apple. Okay, if Apple's on Warren Buffett's list, that should tell you something right there. Also, what it should tell you is look at where the money is going. Okay, here's bottom, shoots up. What happens when the stock shoots up from 194 to 214? That's a $20 increase. Now, $20 increase on a 194 stock, that's 10%. That's a little over 10%. So 10% move, profit taking. Stock comes down. Now look at this. Apple at 194. Well, it was at 194 2 weeks ago. Well, it's at a lot more space to go before we challenge that 30-day high again. So to me, I love this chart. That looks lovely. And it's Apple. You want to see something great about Apple? Take a look at this. The seasonality on Apple. What do you think? You buy it in January? Look at it does. All year long. Up. That's awesome. Well, where are we now? We're right here. Look at that incline right here. How can you miss that? Here we are right here, the blue dot. That's Friday. Let's zoom in a little bit closer so you get a better view. Right there, left click, drag right. Look at that movement. Okay? That is going to the upside. Now, do I want it to go up a lot? No, I honestly don't care. I'm looking for the 1% for 5 days. Buy it on Monday, hopefully be out by Friday. But on Thursday or Friday, I will look at rolling it forward into next week to 2% every single week. Why not? Number one, it's Apple. Apple has a tendency to go up every single year. But it does go up and it does go down. It doesn't go up. So I'm going to be leery of that. So right now, 10% move, drop, 5%. Okay? What happens when she's going to get around here? Well, more than likely, there'll be profit taking again. Maybe that's where I jump out. Now, don't get me wrong. I love Apple. If to do. Think about it. That's all they do. They don't come to your house and take the dog for a walk. They don't dump the trash. They don't even stop on the highway to help you fix a flat. Nope. They go up, they go down. That's it. That's it. That's all. All right. Let's do one on Apple. And actually, this will be pick number 2 for the week. Because I like Apple. Let's get out of that. All right. Let's change this to single. Nope. Single to covered call. That's right. And the 205s. There we go. Now, just one contract. Now, this is going to be a little bit more uncomfortable than the one we just looked at. Because this is $200 per share. What was that one we just looked at? Kohl's. And Kohl's was $9 a share. Huge difference between $9 a share and $200 a share. And we're going to show you right now. All right. Always read it out loud. Buy one covered call Apple. 100, that's the weeklies. 13 June 25, it's going to expire this week. The 205 call option against the Apple stock at the market to open to open. Now the reason it says to open, they're not repeating themselves, they're not stuttering. We're opening two trades. We're buying a stock trade and we're selling an option trade. Now the nice thing about the stock trade, we own the stock at that price. And we own it until we decide to sell it. Now, the option trade, it has 5 days to go, and that's it. 5 days. Whoever buys this option from me has 5 days to decide whether they want to buy it from me or not. Well, what if Apple jumped up 20 or 30 bucks? Well, more than likely they'll take it away. Or 28. And I'm selling it at 205. Not only am I collecting the 70 cents per share here, but I'm also collecting $402 per contract. That's each contract. Now I'm going to show you something in a second. You're going to say, holy cow. But I got to warn you, more risk, more reward. All right, so watch closely. All right, so what is it costing me? To buy 100 shares of Apple, it's going to cost 20,000 bucks. So let's do the math and see what kind of rate of return that is. Calculator, come out wherever you are. All right, so $402 is the profit right there. See, maximum profit. Now remember when I said I want simple, safe, predictable? I know exactly what I'm making before I do this trade. If you just went out and bought the stock tomorrow, there's no profit there until you sell something. So you have to wait for the stock to either go up or go down. But a covered call means I'm buying it at this price, and then I'm selling it to someone at the same moment, and then I'm collecting my profit. If it shoots up, good for the other person. I'm going to say something. I want you to get this in your head and keep it in your head. You ready? Bears make money. Bulls make money. Pigs get slaughtered. Point blank, share the profits. Don't be greedy. And the stock goes up and somebody buys it from me, takes it away from me before Friday, I've already made my 400 bucks because that goes into my account instantaneously. Now, a market order is different than a limit order. So tomorrow morning, as soon as the market opens, regardless of what it opens at, I buy the stock at the opening of the day. Sometimes it's favorable, sometimes it's not. I'm rolling in the morning. When I do a market order, the stock purchase and the option sale are linked together. So I already know what my profit's going to be. 402 per contract. So if I buy 5 contracts, that's over 2,000 bucks. That is an investment into a cash producing asset. A weekly cash producing asset. So I'm buying, look at it this way. I'm buying 402 Apple Street, Springfield, Illinois. It's a house. What am I paying for it? $20,000. Do I want to get 2 of them? Yeah, maybe I'll get 2 of them. That's 40,000 bucks. But the thing is, I can get a cash flow every single week. If you change your thinking. Now, 400 bucks this week. Next week, it might be a little bit different. Okay? Next week, the stock might go up. If it goes up, more than likely, I won't have it come next week. That's ideal. That's perfect. If it doesn't, well, I still collect that 400 bucks, and then next week I can sell it to someone else. If that doesn't work, next week I can sell it to someone else. Every single week, because Apple has weekly options. I can do it every single week. It's not like residential real estate. The only maintenance I have is the internet service provider and the electricity to run my computer. Other than that, no inventory, no employees, no overhead, no building, and freedom to go wherever I want. If I want to go to Antarctica and use, what do they call that, Starlink, and trade while I'm sitting here on an iceberg floating around, I can if I want to. My van on the side of the road, watch the movie, take a break, do some trades. Okay, I got a conversion van. It's a nice comfortable bed in the back. I can drive wherever I want. Pull over the side of the road, kick back, watch a movie. Got a nice picture window there. Open up the window, watching the seaside. People pay millions of dollars to have a sea view. Not me. I just pull up right there on right there on the beach, and I get to see this nice ocean view while I do watch my movies and do my. Anyway, It's a different world when certain things work differently. Stephen Pierce, how you doing, Steve? All right, so I'm going to write Apple down. Let's find out what kind of rate of return that is, and I'm going to show you something you probably haven't seen before. Well, some of you have, some of you haven't. Okay, so profit 402. What is it costing me? Cost of the trade, including commissions and fees, 20 grand. Now, it's not like you're spending the money. It's called an investment. $28,098. Ready? 2%. I love 2%. When's the last time you got a 100% return on your Apple stock? Well, if I get 2% every single week on this play, this Apple stock, well, that's 100% a year. And I'm okay with that. All right? But I do keep an eye on it every single day. I want to see when it goes up. I want to see when it comes down. Where am I? So on Mondays is when I buy all my stocks. Normally, Monday, Tuesday, I buy all my stocks. Wednesday, Thursday, we just watching them. It's kind of like babysitting. Think of it that way. You have kids, well, yeah, you got to water and feed them every day. It's funny, you know. You got pets, you got to water and feed them every day. My pets are fish. I got fish in my fish tank. Okay, every day I feed them. I don't have to water them because they live in the water. Anyway, besides the point. But this is what I want to show you. Okay, this 2% return if you have all cash. All cash is great when you're first starting. When you get good at this, and I gotta say this over and over again. When you get good at this, when you know what you're doing, when you are confident, and it's not going to be within 2, 3, 4 months. It's going to take you a while to get into the confidence part where you can do margin money. Margin money basically means if I put up 100 grand, my broker is going to say, hey, let me give you 100 grand of my money. Let's see how you do. So now I have 200 grand to play with. To play with. 100's mine. I can do whatever I want with mine. But once I'm playing with his money, her money, whatever, I got to be a little bit more careful because I'm borrowing someone else's money and paying for the privilege of borrowing someone else's money. But I will borrow as much money as most people will lend me. Okay, so let me show you what margin money would look like on this trade. I'm not telling you to do that. I always tell people, never do margin money until you understand the risks, because there are risks involved. When the stock goes down, guess what? You lose $2 for every $1 the stock goes down. It doesn't seem fair, does it? The risks. It doesn't seem fair, does it? Well, you're available. Let me explain. If I have 100,000, all cash, I will invest 98, 99% of it. Because I get paid every single week. I'm okay with that. Every single week. But margin money, no, borrowing someone else's money, I have to pay for that. I will go, well, I used to go 80 to 90% last year. Well, that's because the Biden was and everything was running smooth. This year with that DTS crap, Trump derangement syndrome, Trump says something stupid and people panic and they sell and the stocks drop. Yeah, I got 2 margin calls because of that. So nowadays, until this DTS disappears, because the guy's right, he could cure cancer and the Democrats still think he's a piece of shit. It boggles my mind. It does. Some of the shit that's going on, don't get me started on politics. I don't want to deal with that. But anyway, let's take a look at what margin money would look like. Uh-oh. Dennis Mancini, how are you doing? Oh, Pfizer, Verizon, Altria, and Intel? Hell yeah. Dennis, we'll take a look at that in a little bit. Let me show the margin first. And then you'll see something kind of fun. All right, so this number down here, buying power effect, that's how much of my cash is on the line. Okay? 20,000 all cash. That's how much the trade is. But on margin, I'm only putting up 9,800. So let's see what the rate of return there is. Now I'm going to repeat myself. For the risk of being crude, there must be 50 ways to leave your lover. Okay, anyway. Oh, crap, it just went down. 375. That's funny. No, I'm going to use the regular number. I was using 402, 406. I'm going to use 406 again. Divided by this number here at $9,910 on margin. That means I'm borrowing someone's money, which means at the end of the year or every month, I have to pay a margin maintenance call. So if I'm borrowing money at 8% per year, that $100,000, well, I'm paying $8,000 to borrow that money. So you better be right when you're using someone else's money. Okay, so the number here is going to be 4.09%. So it's kind of like double. So you can get 100% return all cash on this deal, or you can get 200% return on margin. But more risk, more reward. Okay? It is a double-edged sword. You get more reward, but there's more risk involved. Okay? In some companies, you can't buy on margin. I think Riley, you can't buy Riley on margin. They won't let you. Anyway, let's keep on keeping on. All right, let's get rid of that. Let's get rid of that. Let's get rid of this. Let's go back to here, and let's go back to here. All right, so that's Apple. I'm going to write that down because that will be trade number 2 for the day. And for the week. Apple's going to be trade number 2 for the week. AAPL, that was a 2% trade. 204, and the 205 call. Okay, so we got 2 trades so far for this week. Apple's going to be 1, and what was the other one? Kohl's. All right, let's see what other questions we have popped up. Okay. Oh, Dennis, you want to be on the video? You want to be on live? All right, Dennis, let's see this. What you got for me, Dennis? Go live with Mr. Dennis. Woohoo! Dennis, can you hear me? Oh, I got to turn the volume up. Oh, it is up. All right, Dennis, it's up to you, brother. You got to turn your computer on. Turn your what do you call it? I'm not very familiar how that works on Instagram. I mean, I do it on YouTube and other ones, but anyway, whenever you're ready, Dennis. Uh-oh, Brian wants to take a look at O Realty. So, Brian, when I say I'm looking for companies that are consistently profitable, okay, I look at 2 criteria, only 2. 1, consistency of profitability. O Realty is not really there. 2nd, weekly options. O Realty is definitely not there. Okay? Now, don't get me wrong, some people like O Realty. Great, no problem, wonderful. But O Realty does not have weekly options. So right there, no. For me. Now, if I had weekly options, maybe. Club Med Tom, Abelmo, cool.
Hey, James, can I take a look at Macy's?
Macy's? Ooh, love Macy's. All right, Macy's. While we're waiting for Dennis Mancini to get on board, let's take a look at Macy's. Macy's. Ooh, love it. Do you see how quick that was? Ooh, love it. The high, low, where was it? Where's it? Look at this. Up, down, sideways, up, down, up. 1240 to 1250, 10 cents. Come on. Did you see that? The premiums aren't that great. Now, it might be great tomorrow, and I do own some Macy's. I think 2 years ago, Macy's was my #1 stock. But this week, 2 to 14, you might get your 1%. Let's take a deeper look at that. Okay, a year ago, Macy's is at 1864, high of the year 2053, bottom of the year right here, first week of April, 977. Well, 977 is the low. She shoots up, pulls back, shoots up, pulls back. Now she got 1, 2, 3, 4. 4 days to the upside for Macy's. And we got a little bit of room to run the last 30 days. Where are we? Last 30. Okay, here's our last 30 days. the high, the low. Look at the movement. 1, 2, 3, 4. 4 days to the upside. If you like Macy's. Dennis, you couldn't figure that out? That's okay, Dennis. Don't worry about it. So what do you think about Macy's? I don't know who was talking a little while ago. All right, anyway. So let's take a... Now, Macy's is not giving a full 1% because the price right now is at $12.40. The $12.50 is going from 10 cents to 14 cents. Now, that number might change tomorrow morning, but look at what we're looking at. Kohl's is given 4%. Apple's given 2%. Macy's, not even 1%. So, give me no to Macy's. All right, what do we have next? Club Med Tom wants to take a look at Able Mall. Okay, Tom, hold tight for a bit. I'm going to go over the other channels and see what kind of questions we have over there. Okay. All right, Mickey. Mickey, let's not be childish, okay? David, UNP. What is UNP? Union Pacific. Is that right? Yep, Union Pacific. Check it out. High, low. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up. 226 to 225s. No. Bummer. That was quick, wasn't it? Thawkins, check my math. I truly love your strategy. Love what you do. Coach Joel, thank you for that. Okay, Thawkins, you gotta give me a better question than check your math. Which one are we looking at on the math? Kohl's is toppy here, though. Okay, Secretariat, how are you today, brother? Okay, what else do we have here? So Union Pacific said no, but thank you for that, David. Hello, American Serbian Mafia. Ooh, okay, thank you for that, I think. Mark. Hey there, James. I don't see the YouTube live with the screen. Uh-oh. Let's check that out for 1 second. He said the YouTube's not working. I have to go to here. Oh, right there. There we go. Alrighty. 2024. Here we go. Got to go over to the YouTube channel. That's all my what do you call them? Social media sites. I have more than that, but those are the ones I really pay much attention to. So let's see. Is it working? Is it working? Is it working? It's working right there. There it is right there. Hey, it's working. It's on. All right, so that's working. What else we have here? Marks. Dividend Stock Talk is not streaming. Actually, it is. I was just there 2 seconds ago. Okay, weekly. What was that?
It's definitely on.
Yeah, I don't know how old some of the questions are, because I stopped the scrolling of the questions so I can read each one, and going from one screen to the next to the next to the next. I don't know how old the questions are because they're not time stamped, but I do go through every single question. Ben Roberts, hello, hello, hello. Antoine, what's happening, brother? Moo Cow, good evening. Basic Fun, do you want to learn trading? Okay. Basic Fun, I don't do the Indian market. Terribly sorry. I don't know anything about the Indian market, so it wouldn't do me any good. What's your trading logic? I'm not quite sure what kind of a question that is. My trading logic is be profitable, not lose weekly income. I think that sums it up. Profitable, weekly income, not lose. Yeah, I think that's pretty good. Safe, simple, predictable, consistent, 1% a week. I think that's pretty good too. Okay, Mark wants to take a look at Riley Adobe. Ooh, is it ADB? Is it ADB Adobe? ADB. No. ABD? Nope, that ain't it either. You have to tell me what it is, because I have no idea what Adobe is, because I don't trade it. But I do trade Riley. Unfortunately, Riley, you cannot do margin. Yes, it has to be all cash on margin, on Riley. High, 24. Low, 260. You imagine that? $24 down to 260. That's a huge drop. Like a 90% drop. 90% drop. But I bought it because the numbers work. Let me show you. Okay? The high, 24. The low, 250. Look at the last couple of weeks. Look at that. Up, down, up, down, up, down. What's happening here? Okay, right here. If you look close, it's getting ready to turn to go back up again. Well, JL Haba, Realty Income O, do me a favor. Check out the consistency of profitability and check out whether or not they have weekly options. I'll be waiting here for you. I'll take a look at that. Yeah, Steve Martinez, Kohl's got you 2% last week, 4% this week. Cool beans, nicely done. All right, so Riley is currently at $2.99. The $3 is going for 12 cents. Do the quick math in your head. 1% of $3 is 3 cents. Well, 12 cents is 4%. So let's throw Riley in there just for the fun of it, and that will be choice number 3. Thanks, I forget who came up with Riley. Someone did. Mark Antoni. Riley, R-I-L-Y. Choice number 3. $2.99. We're going to do the 3s. And let's find out what it's going to go for. All right, let's get rid of this. Now, I already told you I do own Riley, and you cannot buy Riley on margin. Riley has to be 100% cash. Don't ask me why. I don't make the rules. All I know is when I go to buy Riley, I look at the numbers and it's like, wait a second, that's all cash. Because they don't do right. Okay, anyway. So, it's currently the last trade, $2.99. It's currently at $3.12. Well, it's going for 12 to 13, but the last trade was $2.99. What am I buying it for? If I'm buying it at $3.12, it doesn't make any sense. That's why I hate these numbers when they do this after hours, because usually the bid and the ask is usually only a 1 penny or 2 penny difference. Well, look at this one, 263 to 312. Those numbers aren't right. So let's go take a look at the 3s. What is the 3s going for? Okay, one contract. I don't even know if this is going to work because it's after hours. But the math is the same. 15. Okay. Here it is. Buy one covered call. Riley, 100. That's the weeklies. 13 June 25. That's this coming Friday. The $3 call option against Riley at the market to open. We already know what that means. Okay. The maximum profit here is $15.50. Well, what is it costing me? $285. Well, that's not that bad. Let's do the math, because numbers don't lie. 1 plus 1 is going to equal 2 no matter what continent you come from, no matter what country you come from. So let's check it out. Calculator, come out, wherever you are, $15.50 divided by the cost of the trade, including commissions and fees, $285, divided by 285 gives a grand total of 5.4. All right, I'll do that one. Now, I can't give you the margin number because they don't do margin, but 5.4, that's nice. 5.4. Now, that's not a tip. That's not a recommendation. That is just an observation of me punching in the numbers and reading the numbers. KG, we're going to take a look at Albemarle in a minute. Give me a second. All right. Cost of trade, including commissions and fees. 285.16. Buying power effect, 285.01. What are they doing? Give me 15-cent yeah, sorry. Matey goes out, TNA for a beginner. I have no idea what TNA is. We'll take a look at that in a minute. What do we have over here? Oh, Teddy still thinks Johnson & Johnson is a good play. What about ARCR? What the heck is ARCR? No idea, brother, but let's check it out. ARCR. I'm going to go back to the beginning. There we go. ARCR. Never heard of it. American International Incorporated. Never heard of it. It has no options. It's a no. Okay, so who was that? Teddy Lasso. Now, Teddy, I appreciate your input. Really do. I got 2 criteria and only 2. 1, consistency, profitability. 2, weekly options. I should write that up here. I got a board. I got a, what do you call that thingy? Where you write a message board up here. 2 criteria. 20 years consistent profitability. Weekly options only. All right. So sorry, Teddy. That's a no. Edgar, how are you doing, Edgar? Thank you. All right, thank you, Edgar. All right. Ben said, hello. 60 guy, what's going on? Eagle 18, 250-ish. Okay, thank you. Saving your energy. Thank you, Edgar. Henderson. Is SDY a good choice for an old guy seeking to obtain additional income from dividends? SDY. Never heard of it. SDY. Spider S&P Dividend ETF. I'm going to say no. Now, I'm going to say no for me. I can't say no for you because I have no idea what it is you're looking for. Okay? Now, if you think SDY is a good play, great. I don't do it because it has monthly options, and I don't do monthly options because the numbers on monthly options just don't work for me. Okay, I never tell people what they should buy and what they shouldn't buy. I'm just showing you what I do and give you my opinion. Okay, that's it. And I also sing and dance. All right. Anyway, no to SDY. Sorry, brother. I hope. Who was that? Henderson? Henderson, 1958. Sorry. So KG wants to take a look at Able Mall. I love Able Mall. I do. But before I do Able Mall, Matey goes out, wants to take a look at TNA. I don't know why I want to look at TNA. I've never heard of it. Direxion. Oh, it's a 3X ETF. Okay. Well, it does have weekly options. The option prices are ridiculous. The 31.97, the 32s are going for $1. That's 3%. It's in an upward trend. I'm going to say no to this and just have it at that. Who came up with this one? TNA. All right, Matey. Matey goes out. Now, I'm going to say no to this for one reason, or for 2 reasons. One, I have no idea who they are. I don't do 3X ETFs because 3X ETFs means you can triple your money really quick, but there's a double edge. You can lose 3 times as fast. Okay? 3X means if you're right, you get 3 times the profit. If you're wrong, you get 3 times the loss. But the reason why I'm saying no is it's at a 30-day high at the moment. Let me zoom in and show you a little clearer. Okay? 30-day bottom, 30-day high. I never, ever, ever buy at the 30-day high. To me, if it's down here at 18 and it jumps up to 32, that's time to sell, not time to buy. For me. Okay, I don't tell people what to do, though. Okay, KG, we're going to look at that in a minute. Into the blue. Ooh, back again, brother. I haven't seen you in a while. Serious question. If you had $5,000, what or where would you invest in DCA 50 a week? All right, into the blue, my suggestion would be for you, drop me your phone number. Let's have a conversation. I promise you I won't try to sell you anything. I'd say it to everybody. You want to have a conversation? Ooh, before I forget, don't be easily swayed by emails, texts, what's that other one? Telegram, WhatsApp. Yeah, I don't do any of that. If you're getting an email from someone saying it's me, this is why I look you right now. I look right into the camera and I say, if you want to have a conversation with me, drop me your phone number. I will give you a call. Me, personally. I don't pass off to someone else to have them call you, because at the moment there is no one else. It's just me. Anyway, also, I don't do cryptocurrency. I don't do Forex. I don't do futures. I don't do what do they call them? Quick contracts, I think they're called. Smart contracts, whatever. I don't do any of that. Dividend investing for weekly cash flow. That's it and that's all. Okay, so if you are getting emails or texts or something from someone saying it's me, it ain't me. Okay, now I do get phone calls and emails all the time from people very upset with me ripping them off. Well, I'm just telling you right here, right now. I say it almost every night. I don't do those kind of things. Okay, and if I'm going to take money from someone, I will not take money from someone unless you are standing in front of me, shake my hand, look me in the eye, old school style. Terribly sorry, I'm old. Because no, you can't hide it. Can't hide the fact that I'm 61 and I got gray hair. Okay, I do things the old-fashioned way. I use the telephone the way it was intended, to hit people over the head with it. But, yeah, anyway, let's keep on moving on. So seriously, Into the Blue, you seriously want a conversation, and I'll give you my honest opinion. That's about it. I won't tell you what to do because I don't know anything about you. So if you want my advice, you're actually going to have to get on the phone with me and have a conversation. You know? Reach out and touch someone, that type scenario. All right, anyway, let's keep on going. So KG wants to take a look at Abelmal. So let's do Abelmal. A-L-B. Here we go. Abelmal. Check. Oh, nice. See that? Didn't take long to figure that one out. Is that a little bump up right there? High, low, is. Look at the motion. Down, up. Right there. 59.83. The 60s are going for 162. That's over 2%. I love over 2%. And I like Abelmal. Now, I'm going to be honest with you. I did lose Abelmal. I did lose money on Abelmal about 3 or 4 years ago. But I don't hold a grudge. If they give it back to me, I'll be more than glad to take it. So let's take a look at the numbers. Okay. So, a year ago, Abelmal was at the high of the year, 118. Now, remember I told you, if you're not ready to buy a stock at 118 and have it drop down to 50 and not panic and sell, this ain't the game for you. And it is a game. Don't kid yourself. It's kind of like Monopoly. People play Monopoly when you're kids growing up to understand. 3 red houses, 1 green hotel. Or is that 3 green houses, 1 red hotel? I don't remember. Is it greenhouses or red houses? No, it's greenhouses. 4 greenhouses, 1 hotel, 1 red hotel. That's how you get rich in Monopoly. In real estate, same thing. Well, stocks is almost the same. If you treat it like a cash-producing asset. If you're buying it just to buy and hold, well, you're in the wrong place. That's not what I do. I have no interest whatsoever buying Abelmal at 59.83 and holding it for the next 15, 20 years. I already told you I'm not looking for capital appreciation. I need cash flow in order to pay my monthly bills. Because when you retire, your money's got to come from somewhere. And you got 2 choices and only 2. Don't kid yourself thinking you have more than 2 choices. Because you don't. Growing up in the 60s and 70s, we had 2 choices. Chocolate or vanilla. I think it was in the 70s we had a choice of, they said strawberry. Oh, strawberry. Whoa. Chocolate and vanilla. That was it. I think it was somewhere in the 70s they gave us strawberry. Well, now you have hundreds of flavors. But when it's time to retire, you get 2 choices and only 2. Do it yourself, learn, take responsibility for your own money, or you say, you know what? Let me give it to someone else. Let someone else take care of it. And there's nothing wrong with either one. It just all depends on where you are in your financial journey. Some people have so much money that they can easily give it to someone else and share the wealth. Well, that's great. But not all of us are there. See, I can't give my money to someone and expect them to do better than what I can do. Because as far as I know, there isn't anybody that gets over 50% per year consistently. No, Warren Buffett never got over 50% per year consistently. And he's supposedly a better trader than me. Anyway, let's keep on moving on. So Abelmal, I like it. Let's take a closer look. All right. So, nope, I need the glasses for that. 119 is the high. The low, right at the beginning of April at 49. Can you imagine that? You know how uncomfortable that would be? 120 down to 49? Don't panic. If you're going to panic and sell, you shouldn't be playing this game. It's an asset. That's all it is. Okay? Do you like the company? Do they have good cash flow? Do they have good profits? It's either yes or no. Because what goes up must come down. Spinning wheels got to go round. Stop all your troubles by the riverside. Ride a painted pony, let the spin. Okay, anyway, here we go. Bottom, top, down, up. It's simple. Stop making it more complicated than it needs to be. Last 30 days. Okay, last 30 days. Up, down, up. Easy to see. The question is, do you like Abelmal? Do you like it at this price? Are you willing to buy it, hold on to it, and get a cash flow every single week? It's an interesting question. It's an interesting approach. I've never heard of anybody doing it. Well, when my daughter says, Daddy, what are you doing? Can you teach me? Well, that's where it all came from. Daddy, can you teach me? 9-year-old little girl jumped on my lap in 2008. Okay, this was, she's 26. She's going to be 26 in a couple of weeks. I was like, holy shit. I got a 26-year-old daughter. I got a 36-year-old son. Like, holy cow. I don't remember signing up for that. Anyway, here we are. Okay, so let's do Abelmal. Maybe Abelmal could be number 4 for the week. Now, after we get 5, we're going to jump over and take a look at the 5 we picked up last week and see how they look. All right, so Abelmal at 60. All right, let's see what it looks like at 60. Okay, covered call at 60. And here we go. Just one contract to give you an idea what we're doing. Right there. And here's Johnny. Buy one covered call Abelmal 100s weekly 13 June 25. That's this coming Friday. $60 call option against the stock at the market to open. Profit 178. Costing 5,800. Calculator. Come on, let's see it. Let's see it. Let's see it. 178 divided by 58. 22. 3. I'll do 3. 3%. Why the hell not? 3% every single week is going to be over 150% per year. But it always comes back to those 5 very simple questions. Does it make sense? Do I like this company? Am I willing to buy it at this price, hold on to it, and continue to do covered calls every single week and never, ever, ever sell at a loss? Simple questions. It's an investment in your financial future. It either makes sense to you or it doesn't. Either you're looking for cash flow or you're looking for capital appreciation. Okay, there are places we can do both. And there are other people out there just like me standing in front of the screen saying, hey, this is blah, 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 blah. And yeah, what they're doing may work, but it's looking for a different answer. The answer I have, 1% a week, simple, safe, predictable, consistent. If you're looking for more than 1% a week, or if you're looking for something to buy and have it shoot like to the moon, you're in the wrong place. Terribly sorry. Sorry for wasting your time for being here. Into the blue, and thanks for the phone call. Did I already talk to you? There's a possibility I may have talked to you already because I noticed the name. Now, I'm very good with names. Okay, if somebody signs in with a name, it's like, oh. Now, George, I can't help you out because George is such a common name. It's like, you could have been here before. I really don't know. But Into the Blue, that stands out. Okay, I know he's been here before. Tony Johnson, that I remember. Nico D, that I remember. Coach Joel, he's been here plenty of times. Great story with your van on the beach. Well, think about it. Okay, now I come from Massachusetts. There's a place called Marblehead, Massachusetts. People pay millions upon millions of dollars to have an ocean view. Nice thing about it is you can pull right onto the beach. Put your quarter into the, what do you call it? The pay to park thingy. I forgot what it's called. The meter. The parking meter. Yeah, that's what it is. And you just sit there, watch the sunrise. I've done it many times. I got a queen-size bed in the back of my van. Prop up the pillows, open up the curtains. I sit back, relax. I got a little thingy right here. I put my phone right there, and I can watch movies, watch the sunrise. Freaking awesome. And down here in Florida, I can do the exact same thing, but opposite. I can't see the sunrise where I am, but I can see that sunset. Anyway, and I don't have to pay millions of dollars for the view. Anyway, let's keep on moving. Canman, FRU.TO. That does not sound like a U.S. stock, so it's probably going to be a no. Apple stock reaction to WWDCTM. Okay, George, I appreciate the information, but to me, that doesn't make any sense whatsoever. Okay, what is WWDC? TM. Okay, I have no idea what that means. Scotty Cook's in the house. Shockgate. All right, over here we have saving your energy. I was answering your question about where you were going with Muhammad. Oh, yeah. Yeah, absolutely. Yeah. See, if you ever watch the fights of Muhammad Ali, he's just like, loosey-goosey, all that. But when someone comes in within hitting range, yep, he's all tense and ready to go. It's a strategy he uses. Used to work out good. Okay. What else do we have over here? Mindy. Good evening, Mindy. Rob, and into the blue. Oh, look at this. I'm done with all the questions over there. So what do we have over here? Moo Cow wants to take a look at Mara and Humana. Ooh. Okay, Mark, we looked at Humana last week. Was Mara on last week? No, last week was Ford, Apple, United Airlines, CVS, and Humana. I probably should take Apple off the list for this week because having it 2 weeks in a row, I'm sure you guys want to look at something new. But we're running out of time, so I might as well leave it there. All right, we're going to look at a couple more, and that's going to be it. Mara. Oh, anyway. Oh, before I go, did you see this? Cost of trade, including commissions and fees, $5,800. Okay. Buying power effect, $2,800. That's margin. That's cash. Okay. All cash. What was it? 5 point. No, that wasn't it. Which one did we do? Able Mall. Able Mall. Yeah, I didn't write that one down. Able Mall. What was the return on Able Mall? 3. Wasn't it 3? It was 3. And which one did we do? Stock's currently at 59.83. 59.83, and we're looking at the 60 call. Cool. We got one more to go. And Mara. Now, I do own some Mara, just to let you know. Single and here we go. Mara. M-A-R-A. A is for. Ooh, like it. Did you see how quick that was? 3 to 4 seconds. High, low, was, is. Look at this. Up, down, up, down, up, down, up. It's in an upward trend here. The high is here. The 30-day high is here. Bottom here, and it's moving up. I know you can't see it there, but I'm going to zoom into it if the numbers work. So let's take a look at the numbers. It's currently at 1578. We're looking at the 16s and 16s. 45. Come on. Right off the top of your head, 45 is close to 3%. Close. Okay, because 16 multiplied by 3 is 30, 48. Okay, so 45 is just a tiny bit below 3%. But let's take a look. All right, a year ago, Mara is at 1936. Jumps up to 30, drops down to 10. Ouch! That's a 60% drop. 30 down to 10. That's 66% drop. 2/3. But from 10 to 18. 10 to 18. That's a big jump. 10 to 18 is an 80% increase from here to here. Okay? Because 10 to 20 would be a 100% increase, but it only went 10 to 18, which is only $8 increase on a $10 stock. That's 80%. Jumped up, pulled back, now she's going back up again. That's what I want to see right there. So let's zoom into that. Look at that movement. High, low. Look at it. Up, down, up, down, up. Okay? Last 30 days. I want to zoom into that last 30 days and click my heels and say, yippee skippy. Here we go. Okay? Bottom, high, low, up. We have all this space up here. You keep running. Now remember, I'm only looking for 1 or 2%. That's it. I'm going to buy it, sell the 16, and the 16 is only right there. By Friday, I'm out. I already got my money. I got my profit. Thank you very much, and I'll see you the next time. So let's take a look at it. The 16s. The 16s for Mara. Okay, let's change this to covered. The 16, there it is right there. 1539, 49, blah, 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 whatever. One contract right there at the market. Now, there's a reason why I always do market orders. Because I want to be filled instantaneously. Because here's the thing. I'm selling time. That's what I want. I'm selling time. Monday morning, 9:30 a.m. to 3:59 p.m. on Friday. That's the maximum amount of weekly time there is. There isn't anymore. Okay? Market opens at 9:30. It closes at 4. So whoever buys this option from me, they can buy it at 9:30 a.m. But the only they can do something with it up until 3:59 p.m. Because at 4 p.m. market closes, the option expires. Okay, so let's take a look. Buy one covered call, Mara 100 weekly, 13 June 25. That's this coming Friday. The 16 call at against the Mara stock at the market to open, blah blah blah. You heard all this before. Here's the profit, 56. 1,500 is the investment, all cash. 1,000 is the investment on margin. So let's take a look at those numbers because it sounds pretty good. Sounds delightful. All right, here we go. 56 is the profit divided by 1,544 little pennies and 3.6. Ooh, we got 5 good ones. Let me run over them really quick. Okay, so 1578. 1578. The $16 call. Mara. M-A-R-A. And that was 3.6. Holy cow. Okay. We got Kohl's 4.7. Apple 2. Riley 5.4. Albemarle 3. And Mara 3.6. Now, those are not tips. Those are not recommendations. Those are nothing more than me looking at what you guys suggested, running through the numbers, and just relaying to you what the numbers are. That's it. That's all it is. Okay, I'm not giving any tips whatsoever. I don't give advice. I'll give you my opinion, and that's about it. All right, so we got a few minutes left. Let's go over the 5 from this week, or last week. Ford was one of them. We already saw it. Let's get out of there. Oops, go back to here and go back to there. Okay, so Ford was on the list last week. Didn't make the list this week. Last week. Here we go. All right, so here's Ford right here. Okay? This is Monday. Monday's open was 10:27. So more than likely, now I didn't write, I'm going to apologize, I didn't write it down the way I wrote it down today. But today I wrote down a little bit more, stock price, the option, and then what we jumped in at. I didn't do that last week, but let me just give you the numbers in case you get it. So the opening price on Monday was 10.27. So more than likely we would have done the 10.50. So did it go above 10.50? or did it end up above 1050 by Friday? No, it didn't. So we would carry Ford into this week. Now, don't get me wrong, I love Ford, it's a great company. But it didn't do what I wanted to do. But I did collect the premium. We would have collected the premium. And it was at 1027 and it ended up at 1026 by Friday. Okay. It means I would still own it into this week. Okay, the next one was Apple. And Apple, last Monday, okay, right here. Okay, the opening price on Apple last Monday was right there, was 228. So more than likely we would have done the 200s. And we would have been out because it ended up at 203. So Apple was a yes, would have been in and out last week. That's a yes. That was a good one. United Airlines. Okay. Here's Monday right here. Okay. Opening price, $78.93. More than likely what we would have done the 79s. She ended up at 84. Done over with, back into cash Monday. Okay, so that's 2 out of 3. Next, CVS. Okay, CVS on Monday, we opened up at 63.50. Now this doesn't have a 63.50, so more than likely we would have done a 64. We ended up at the end of the week at 63.58. So we probably still have CVS this week. So we get 2 good and 2 not quite. But don't get me wrong, I still like CVS and I still like Ford. I got no problem holding on to them. Because take a look at these CVS now. The 63.50, the 64 is still going for 77. So I can get another 1%. So I got 1% last week on CVS. I can get another 1% this week. Because this week, the 64 is going for 77. Okay? Now, Ford, last week we got over 1%. This week, not quite 1%. But we still would have kept it anyway. Last was Humana. Okay, here's Monday right there. Okay. Now, more than likely, Humana on Monday, the opening price was $232. So more than likely, we would have done the 233s, which they don't have one, but they have a 232.50. We would have done that one. However, she ended up at 230 at the end of the week. So out of the 5, 2 of them would be bound back into cash. And we'd have the other 3, Ford, CVS, and Humana. Okay, I don't mind, because look what Humana's giving me this week for the, now remember, it was 232. So I'd still be doing the 232s this week, and it's still giving over 2%. Well, 2% last week, 2% this week on Humana, if you like it. So yeah, last week we picked out 5 decent ones. Okay, we got rid of 2 of them. We have 3, carried it over. 3, we're doing the exact same numbers we did last week, and we're getting another 1 or 2, 3% for this week. So next week we picked out, what do we have? Kohl's, Apple, Riley, Albemarle, Mara. Okay. They are not tips. They are not suggestions. Do your own research. Never blindly listen to anybody online. Do your own research. Make sure it makes sense for you. Okay? If it doesn't make sense, don't do it. Okay? So, we're past 11:30. Hope you guys had a nice day. Let me go through some of these questions we have right here. SCHG. Hell no. What's my favorite stock this year? It would be U.S. Steel. Okay, AO. SCHG. No. Take a look. Do yourself a favor. Take a look at all the numbers. When I say all the numbers, that means what kind of dividends are they paying out? Are they consistently increasing? What are the monthly options looking like? Do they even have weekly options? Don't know. Did you work in investment banking? No, I was actually a CEO in a manufacturing company. Put on Etsy. All right, thank you. Gap. Chris, we'll have to take a look at Gap tomorrow. Allie, good evening, Allie. How are you today? What do you recommend for beginners to learn the basics? Keep showing up every night. Keep asking questions. Never stop asking questions, Allie. The quality of your life is directly related to the quality of the questions you ask. Ask better questions, you're going to get a better life. Chris, Riley was almost delisted from NASDAQ, haven't reported their overdue financials. Imagine that. Thoughts on JEPQ? I'm going to say the same thing I say to everyone on companies that the numbers just don't work. Take a good look at JEPQ's numbers. What is their revenue per share? What kind of dividends have they consistently paid out? Have they consistently increased? What do the options look like on JEPQ? I've looked at it plenty of times. You're not the only one to ask me about that. Samson, I remember pushing for Dollar General when it was about $70 range and everybody laughed. Oh, Samson, I love Dollar General. Okay, it is on my list. And I honestly don't care what the price is. My major concern with any stock that I buy is consistency of profitability. Are they consistently profitable? And do they have weekly options? That's the only two criteria I'm looking for. Okay, and if everything works, I wouldn't mind buying Dollar General if everything pointed in that direction. So let's keep on keeping on. 310 Life, how are you today, Allie? What do you suggest? Okay, I'll be just that one. Okay, Jazzman, Misty, you already asked me that question earlier, and I told you, find out how consistently has Misty increased their dividends. And we'll talk about that. 86, dude, it's 11:32, and you're just getting here? That's actually pretty genius. Samson, glad you like it. Recent dip as well. Got it. Wow, just learned I can be brevet. I have no idea what brevet means. Now, I admit I didn't go to college, okay, but I did graduate high school, and brevet was not anywhere on my words to remember for the day. Oh, take a look at this. Jeb put his entire net worth into meme coins. Okay. Can't believe it took till 10 p.s. to get strawberry. Well, I lived in a small town. Okay, we had one traffic light. And the only reason we had the traffic light, because we were on Route 3A. Now, 3A is the old, now listen to this, you're going to get a kick out of this. Route 3A in Massachusetts was the original Indian Trail going from Boston to the Cape. It was an old tiny road, big huge twists and turns up it. It's a cool road to drive down slowly. But yeah, we had one traffic light in town, and that was on 3A because 3A was a federal highway. Are you a daily or weekly? Are you on daily or weekly charts? Daily. No dividends on merit. Yes, Eric, I'm aware of that. Can you do anything on Tesla puts? George Floyd. George Floyd, you got to come up with a new name, dude. That's not a name I'd put online. I listened to some reports on Tesla over the weekend, and it got me thinking that I got to change my point of view on Tesla. Okay, Brian, we did Albemarle like 5 or 10 minutes ago. Mimi, did you know Play-Doh has a better return than Apple? No, I did not know that. Sorry, Brian. It's okay. Why don't have blue vector candles on your charts? Leo? Leo C 591. Why don't I have blue vector candle on my chart? Well, number one, I don't pretend to know everything. So I'm going to admit to you right now, I have no idea what blue vector candle is. None whatsoever. The trading strategy I'm giving you for free. Okay? I'm not asking for anything. I'm not asking you to buy anything. The trading strategy I am showing you was created for a 9-year-old. 9-year-old little girl. See, when I say 10 minutes or less, okay, how do you keep the attention of a 9-year-old? It's got to be simple, safe, predictable, consistent, no way for her to lose. All within 10 minutes. So if you want to start throwing out stuff like blue vector candles, well, there's a lot of other stuff we can throw out there also. Fibonacci, we can throw that out there. We can also throw out Black-Scholes pricing methodology for standardized options. There's a lot of stuff we can throw in to get better rates of return and to get better trading. But you got to remember, where did it come from? It came from a 9-year-old. Okay? So if you want to get more complex, if you want to get into this really deep stuff, fine. We can have a great conversation. However, simple, safe, predictable, and consistent 1% a week is what I'm looking for. I don't want to complicate things. You want me to learn what a blue vector, whatever that thing is. Well, fine. How's that going to change anything? Okay, so we're all done here. Arnold, what's happening? Okay, so we're all done with TikTok. Let's take a look over here. Thank you for the information. Done with that TikTok. Cool beans. So here, YouTube. Moo Cow. Yep, we looked at Mara. Yep. Yep. Gary, what is your price per share cut off dollar-wise that you won't consider? Over 250. Okay, Gary? I don't like doing stocks over 250. Because if I can get a rate of return for 2, 3, 4% on a $10 or $20 stock, I can buy a lot more $10 or $20 stocks than I can $2, 3, 4, $500 stocks. But here's the thing. If I dump all my money into a $500 stock, get 1%, that's almost the exact same as taking all that money and put it into a $20 stock. Yeah, I get more shares, but 1% is 1%. So if I buy, 5 contracts at, $500 a share, and I make 1%, that's that number. But at $20, 1%, it's still 1%. Just tell them you're guessing. It's a bad idea to trade. There you go, Travis. Ton KS. James, good evening. Could you show how to sell a call for stock that was not assigned last week? Thank you. Humana bought it at 231 with the 232, okay, which did not get assigned. Well, great. All you do, all right, that's a great one. Great question. You already own the stock at 231.55. So you're going to look at the 232.50. Simple. Instead of, well, let's get rid of this because we don't need this. Okay? Instead of going to covered stock, right? That's when I buy. Because I buy the stock and I sell the option. When I already own the stock, I'm doing a single option trade. So just go back up to single. There you go. And then you come over to the 232.50s. And you see that tiny little word right there that says buy? I don't want to buy them. I don't want to buy options. I want to sell. Right there. Hit the sell. Okay? And however many shares you have, if you have 1,000 shares, well, you're going to sell 10 contracts. See? Single, sell, however many shares you have, or contracts you have, and then the rest is the same. 13 June 25, the 232.50 call, blah, 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 blah. So if you got a good question and you really want to chat, drop me your number. I'll give you a call. I'll walk you through it. Okay? Brian, you just got on. Brian, I'm just getting ready to leave, brother. I'm here from 9 until 11:30. Now it's 11:40 now. I'm just finishing up the questions. I answer each and every individual question. Sometimes it takes me a while, but I'm done with the questions there. I have one more set of questions to do, and that's it for the night, and we'll see you guys again tomorrow. So what else do we have here? David, we already looked at UNP. Jamar, hello. Oh. Nezradine. Tomorrow is Monday. What are we investing in? Okay, what are those numbers? Crypto tone lock. Oh, tone. I love tone lock. Okay. What are these numbers? Stock options, calls, puts. Bro, we can't read anything. Well, Mark, the reason you can't read anything is you're probably on your phone or your iPad. That's why this screen here is live on YouTube. So you can go on over to YouTube, into the other room, your big screen TV, pull up YouTube. You should have YouTube with your cable provider, whoever that is. But it's live on YouTube. That way you can see the numbers. Until I get an AV guy in here that can zoom in to this stuff. Right now it's just me. I got 7 cameras going. I can't zoom into anything. Okay, I know what I'm doing. I just don't know how to use the software. Let's put it that way. Newman, how are you today? Like your daily 55 EMA for trend. All right. Performs with a buy and hold or what? Okay, crypto, I don't do it that way. No volatility. All right. If somebody says they make money without a working strategy, they are either guessing or bullshit. All right. Well, I do have a trading strategy. You're new here. I'm good with names, and this is the first time you showed up. So you want to show up every single night? I got no problem whatsoever telling you what my strategy is. Matter of fact, I go through the whole thing while I'm here. You just got here late. Brock and Load. When you open, sell an option, when do you decide to close a position? Or do you just like expire? Most of the time, I do say 90% of the time, I let them expire. But on Thursday or Friday, we will take a look at them and see, does it make sense to push it and roll it forward into next week? That's called rolling an option. You just push it into next week. Christopher, how are you today? Thank you, thank you. How many years did it take you to trade profitably? 1. My first year trading was back in the 90s. Like everything I bought, I got 125 trades in a row that were profitable. It was freaking crazy back then. But the thing is, back in the 90s, it was $250 commissions to buy stocks and options. Okay? It was great when they dropped it down to 125. 125 was great. Yeah, now it's down to nothing. You just pay exchange fees. Yeah, back in those days, 125 trades without a single loss. Anyway, it went to my head and made me do stupid stuff. I just started watching you recently. Thank you. Finished work of Jesus. Okay, cool. Ford was a 2% win for me last week. Moo Cow, way to go. Now, Moo Cow, it was not a suggestion, it was not a tip, it was not a recommendation. I just read what you guys give me. I put it into Think or Swim, which is from Charles Schwab, so none of this is mine, and I just read the information. That's it. Whether or not you decide to do that, you are 100% responsible for whatever choices you make. If you like the Ford trade and you do it, that's your responsibility. I didn't do Ford last week. No, I didn't. Hello, I'm from India. Namaste. All right. Moo Cow, Coles ex-dividend June 11th. I don't think it is going to hit 9 by the end of the week. Okay. Cypher. As soon as you hit send, they sell. Okay. May God always protect the United States of America and our nation. I just hope everybody does stop doing stupid shit. What about investing in myself? Hey, Zhang Fu, great idea. I don't know what rate of return you're giving, but all right. Do you ever do the wheel strategy? No, because numbers just don't make sense to me. Whenever you ever going to finish your work in my life? No, it's not my job. All right, Christopher, thank you for that. Dive Bandit. GameStop, no. AMC, no. Not for me anyway. If you like it, great. Christopher Choco. Bro, do you go to UK, whatever. Slater, how much Altria do I have? Holy shit, I don't even know. Wait a minute. Do I have Altria? I don't think I have Altria. I had Altria a couple months. No, wait a minute. Do I? I think I do. I'm not sure. I got 7 accounts. I don't know all of it off the top of my head. Oracle returned 3% and trending up over a week. Cool. Tyler, your thoughts on solar? Have a company that wants to build on 300 acres I own. Think I have to worry about them going bankrupt? I know Trump not biggest on solar. You know, there are a lot of good and bad about everything. Okay, now Cable Hines. I love Intel. I do. I actually own some Intel. But we'll have to look at it tomorrow. I'm not finishing up the questions. So anyway, it's the solar. I actually make solar electric boats in my spare time, which I don't have a whole lot. I take old boats and I put solar panels on the top of them, and I put electric motors in them. No, they don't go very fast, but I live in the Sunshine State. So if the sun is shining, I get to go for a free ride. Okay, I'm not in a hurry, so I don't need to go fast. So solar, everybody has their own opinion of it. Some say yes, some say no. Keep your land by Misty. Ugh. Yeah, all right. Explore the web. Hello. Wisdom of life. That 1% out of what? Okay. Wisdom of life. 1% out of what? Hypothetically speaking, let me see if you understand that. If my trading account has $100,000 sitting in it, 1% is 1%. That's $1,000. If my trading account has $20,000 in it, 1% is 1%, which would be $200. Okay, so whatever my account has in it, 1% of that is what I'm looking for during the week. So if I have $55,372, 1% of that is $553. Okay, 1% is 1% no matter which way you look at it. If I do it 100 weeks, oh, I'm doubling my money, aren't I? Yep, 1% on capital. Do you also buy dividend-paying ETFs? Only if they have weekly options, and not very many ETFs have weekly options. John Doe, in what situation could you lose, and how much of 20K could you potentially lose? An example, what is your risk on the position? Okay, first off, John Doe. Okay. Originality, kudos on the originality for that name. Number one, I only buy companies that are consistently profitable, number one, and have at least 2 decades of profitability, which means they are more than 20 years old. Now, most companies just starting out don't make it past 3 to 5 years. 1 in 1,000 will make it past 10 years. So imagine how good of a company you have to be or have to have 2 decades of profitability. That's number one. Number two, how could you lose money? Well, most people lose money. You ready for this? You're gonna think this is funny, and you're probably going to think you're not going to do it, but everyone does. Most people lose money when they start out by hitting the wrong button. Isn't that weird? Hitting the wrong button. Selling instead of buying. Buying instead of selling. Hitting the wrong date. Hitting the wrong strike price. That's where most people lose money. By hitting the wrong number. And where can you lose? Well, if the company goes bankrupt. Well, why would you invest in a company that might go bankrupt? Now you might think, well, most of them don't know. Well, if a company is 20 years old and they're consistently profitable, well, they know whether or not they're bankrupt or going to go bankrupt. And if it's your money, you should be, hypothetically speaking, keeping an eye on it. Okay? I look at my money twice a day. Once in the morning with the morning trading group that I have. It is a paid service in case you're interested. I'm not trying to sell anything, but it is what it is. I look at it in the morning. Where is my money? What is it doing? Okay? And then at night with you guys, same thing. I take a quick look. Okay? What is it doing? It's your money. You should keep an eye on it. Okay? So how do you lose? By making a mistake. That's the most part. By making a mistake. Not that the company goes bankrupt. Now, companies do go bankrupt, but usually they let you know, and usually you find out. Now, let's take a look at 3M for a second. Last year, they had a huge lawsuit, and they cut their dividends. After 66 years of increased dividends, they decreased their dividends. But did they go out of business? No. Apple had to pay a couple of $1 billion in a lawsuit last year. Did they go bankrupt? No. If you're keeping an eye on your money, a bankrupt company is the only way you're going to lose. But if you're investing in a company that has a possibility of going bankrupt, well, they usually cut the dividends before they go bankrupt. And if they cut the dividends, why the hell are you investing in the first place? Knowing the numbers, knowing what you're buying, keeping an eye on your money. It's like if you have a garden and you don't go out and weed it, well, eventually they're going to take over. Okay, if you have pets and you don't feed them, well, eventually something bad's going to happen. You need to take responsibility for your money, just like you take responsibility for your kids, just like you take responsibility for your car. If you don't wash your car, change the oil, change the tires, well, then you're taking risks, unnecessary risks, because it's not that difficult to open up your computer and say, hey, all right, I bought Ford this week. What's it at today? It's not that difficult. So how you lose? By not paying attention and by making simple, silly mistakes. Now, I say simple and silly. I've been trading for over 20 years. I hit the wrong button 3 times this year. I did it live once. I was live in a group chat with the people in my morning trading group watching me hit the wrong button, and nobody said anything. I said, shit, you guys didn't just see that? I just lost $2,500 because I hit the wrong button. And I've been trading for 20 years. So, yeah. That's how most people lose money, by hitting the wrong button. And it sounds so juvenile. And you're probably thinking to yourself, I'm not going to do that. Yeah, you will. Trust me, you will. You trade long enough, you're going to hit the wrong button eventually. Get used to it. Everyone does it. Dawson, you're welcome. Let me see. Thank you for talking first time I have been here, and I love how you've flattened the processing. Okay. JC, I have, definitely. Yep, I have too. Shell, is that? What's PP? PP, I have no idea what that is. All right, let's keep on going. Innocent bystanders. Hi, I'm new here. Can Coney be long run? I have no idea. Okay? Now, I've looked at the numbers for Coney, and I do know that there's no possible way on God's green earth are they going to continue sustaining those numbers. Because it's unsustainable. There's no possible way anyone can give out 125% of what they profit. Think about it. If I make $100 million this year, well, I'm going to pay out $125 million in dividends. Explain to me how that is a profitable scenario. It's great for people who have the stock. Okay? You're getting 125%. Well, you're getting, 125%. Well, that's great. Where are they coming up with that extra 25%? And are they working for free? Where is the money coming from? Think about it. The numbers are unsustainable. You cannot pay out 125% and expect to stay in long term. It's just, anyway, spoke my mind on that one. Peter, do you just let the contract expire, or do you manage at a percentage of credit received? If it's a loser, do you roll it till the next week, or just start over and recenter? Pete, that's an awesome. Is that Pete or Pele? I can't really read it. Pele Fuentes. It's always about the numbers. What did I buy it at? What strike price did I sell? What's it at now? Am I at profit? Am I at loss? Is there a possibility for me to roll it forward and get some more money? It's always going to come down to the numbers. And unfortunately, when we buy on Monday, we have no idea what's going to happen out throughout the week. Now, even though the chart may say something like it's going up or it's going down or it's going sideways, that doesn't mean it's always going to happen that way. Because every day, it's a crapshoot. Okay, we should keep our eye on it. That's it. But always pick a good company, one that you're willing to hold on to long term, one that you are willing to hand down to your children eventually. Uh-oh, I got low battery. Can't have that, so let's switch on over to here. I gotta get a new cord. Funny thing, I have to get new cords every couple of weeks. Some strange reason, these iPhones just eat up power cords. Go figure. All right, anyway. Apple WDC is this week. Okay, what is WWDC? Is that one of those new rustling thing? A new Russellmania thing? WWDC, coming to your town this week. Get your tickets now. And if you order now, you get 2 for the price of 1. Lithium ion or SMR. Okay, JC, I'm clueless what that means. Fix those battery constraints for you. Okay. Let's keep on going. WWDC, I have no idea what that means. May impact stock price. Well, lots of things could impact stock price. And which stocks are we talking about? Because stocks can get impacted by the weather. Okay? The wind blows the wrong way, some stocks are going to go down. Okay? If it snows, some stocks are going to go up. If it rains, some stocks are going to go down. Everything is different. Okay? Every stock is different. There's over 10,000. We didn't do that today. We're going to do that tomorrow. Take a look at how many companies we have available. So yeah, all stocks. Allie, we're going to take a look at that one. Are you what so-called market maker now? I'm not a market maker, no. Why don't you use indicators? I do. I use 2 indicators. Consistency of profitability and weekly option. That's it. Okay, so what I do, a trading strategy for a 9-year-old. Okay, is it going up or is it going down? Where does it look like it's going to be by Friday? It's really not that difficult. Adults have a tendency to make it more complicated than it needs to be. Eric, MRK does look good. Your strategy is great. I mean, you're living, but indicators. No, I don't use indicators. Okay, it's not that difficult to see if a stock's moving up or down. KMI or OXY. Now, I know who OXY is, Occidental Petroleum. KMI, is that Kinder Morgan? I think it is. We'll have to take a look at tomorrow. Shell, for the options, do you put a sell order in advance when your stock hits your target price? No, I let them get called away or let them expire, one or the other. All right, next. I invest in myself by eating healthy, going to the gym, and being a good neighbor. Cool. You do realize those 3 things you just labeled, okay, it's not a complete life. There's 9 different, what do they call those things? Hold on. Is it aspects? 9? So you have health, money, family, religion, contribution. There's 4 more. I forget what they are. But there's 9 aspects of your life. You're just talking about 3 of them, or 4 of them. So how's your finances? How's your education? How is your religious life? How's your relationship with your family? It's nice. You're eating well. You're healthy. You exercise, and you're a good neighbor. Great. That's only 3. Well, what about the other 6? Okay, because no matter what you do, you cannot get past the fact that as a human, you got to pay to live here. That's one. And what kind of contribution are you giving to society? Are you a drain on society? Yeah, you might be nice to your neighbor. You go to the gym, you're healthy, great. But are you a dick to your family? Okay, so just because you got those three under control, what's the rest? What's the rest of your life? Now, money is a very small portion of your life, but it's a very important one. There's two major reasons for divorce: money and infidelity. That's it. Money and infidelity. If you can get the money thing situated, you never have to worry about money again. Great. Now you just got to worry about keeping your pants on. I can't believe I said that. I can't believe I just said it. Just blurted out. But good luck with that one, though. RKLB, Rocket Labs. Ooh, we take a look at that one tomorrow. Invite me life with you, please. Explore the web. Okay, number one, I don't invite anybody online unless I've actually talked to them on the phone. So if you want to go online with me live, I want to know what kind of person you are. I want to know what you want to talk about. Because there ain't no way I want to talk about Amway. Ain't no way I want to talk about cryptocurrency. And ain't no way I want to talk about what's happening in other parts of the world. Religion, politics, don't care. Don't want to know. Okay, that's your thing. Or whoever. Richard Attenborough. Oh, my dog went missing. Bummer. All right, Richard. I really don't like the silliness, so I'm going to get rid of you. All right, there we go. That's Adobe, ADBE. All right. Archers, no. SoFi, no. Intel, yes. Yeah, I get it. Stephen, how are you doing? What do you think of the new efficient market hypothesis? Okay, Stephen, you're going to have to tell me what it is because I'm totally clueless. I like things simple and easy. Okay, and if it's a new market hypothesis, I haven't heard of it. Sorry, Pele, that was a typo. Okay, Scott, just curious what someone who does this analysis would say about it. Okay, like I said, I have no idea what it is. Seems like he's not checking this chat. Okay, thank you. Riley doesn't meet consistency and profitability criteria you require. Numbers are terrible. Okay. Nothing wrong with that. You're absolutely right. Riley normally is not on my list. But when someone... Yeah. Kyle White, I don't know why you're retired. Easy cash flow, everyone just send their bank info in the chat. That's a horrible idea. Is this real, Jameson? No, it's not. What does it mean, though? I have no idea what you mean. What does it mean? What ticker is we talking about? We talked about a lot of them, and then there's so many different questions. I don't know at what point in time you're asking which one we were looking at. But right now, we're looking at Humana. Ford is terrible. Okay, why would you own Ford stock? Okay, thank you. Smart Forex trading bots. Hello. Do you think binary options trading is legit? I just told you I don't do that. Yoo-hoo. Hello. How much are your course or are they free? I'm here free every night. I don't charge anything. And my course, I haven't got one yet. Hey, James. Rumor is... Okay. Thank you, Daniel. How long will you figure out he's reading the chat? Okay. Now, wow. You're still online. I watched you on my old account when you taught your daughter. Holy cow, that was a long time ago. Do you have certain site you use to trade? I trade on Thinkorswim, which is through Charles Schwab, and I also trade on Robinhood. Okay, let's keep on going. On one of these streams, could you share some pictures of your aquarium? Oh, moo cow. I believe it is on my other YouTube channel. If you look at all the videos in my other YouTube channel, it's on there, some of them. Because I during the day, you know, when I don't do it every day, but every once in a while, I'll take my camera and I'll just live stream the aquarium so people can watch the fish. Anyway. Nah, I have lost lots of money on options. All right, Dustin, no problem. And a bunch of others do the same. Okay. If it was easy, everyone would be rich. Okay, Dustin, I love it when people say that. If it was easy, everyone would do it and everyone would be rich. No, not necessarily so. Because I could hand you a treasure map, put an X, hand you all the tools, drive you there, but I cannot force you to dig and get it. Okay? Just because it's there, just because it's in front of you, doesn't mean everyone's going to do it. Okay? People complain about free lunches. Give someone a free lunch and they'll complain about it. People won't do it. People are weird. People do what they think is right for them. So whether or not you give them the keys to the castle, some of them won't do it. Don't ask me why. Okay? My niece won $15 million in a scratch-off. $15 million, a scratch-off. She's broke now, working 9 to 5, trying to make ends meet. Why? She didn't ask her uncle. She didn't. I've written 15 books on investing. Did she ask me once? No. She blew all the money. Blew it. It's gone. 15 mil. Okay, so yeah, it's not true. Okay? You can believe whatever you want to believe. And if it was easy, everyone would do it? No, that's not true at all. It's my cousin Sophia's birthday. Could you tell her happy birthday? She's turning 4. Happy birthday. What did that? Yep, did that several times so far, hitting the wrong button. Hey, everyone does it. Thoughts on crypto bulletin? I'm full-time crypto trader. Good for you. I don't do crypto because there's no way to get a safe, simple, consistent profit from crypto without sitting in front of your computer. Sorry, I just don't do crypto. What's your thoughts on GameStop? No dividends, no thank you. WDC is Apple Worldwide Development Conference. Oh, thanks, Eric. Not quite sure how that's going to affect the stock, but all right. Brian, awesome to see you again. Thank you, Brian Taylor. It's my old... I'm the old and wise. All right, thank you. To be old and wise and completely dismiss talking to me about crypto. I'll talk to you about crypto all you want. You're not going to like what I have to say. It's just that plain and simple. Crypto is a great idea. That's all it is. It's a great idea. To be able to transfer money from one place to another instantaneously, it's awesome. Okay? How do you keep the bad actors out? How do you get a safe, simple, predictable cash flow? And which crypto coin gives you a dividend just for owning it? None, no, 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 and none. So I don't do crypto. There's no consistency. There's no way of being profitable on a weekly basis without having to sit in front of your computer. I have no desire to sit in front of my computer all day. Been there, done that, got the t-shirt. Yeah, no thank you. Old and clueless. Spot on. Thank you. Just wanted your opinion. That's why you're single. No, I'm not single. Isn't that weird? And just to let you know, you love crypto so much. Yeah, us boneheads, us losers, us old people that you call. Well, if it wasn't for us, you wouldn't be here. You wouldn't have crypto. You wouldn't have computers. You wouldn't have the internet. So stop giving me that you old people bullshit, okay? You're going to be old someday, and you're going to be irrelevant someday, just like you think I am. Fine. Ain't nothing wrong with it. Stay blessed, old school. Thank you kindly. Old and clueless. I love that one. Any day you want to go head-to-head on wisdom, it's something you cannot buy, no matter how much money you got. One thing you can never, ever, ever buy is wisdom. That just takes time. That's it. No matter how much money you got, you cannot buy wisdom. You have to earn it. And I've earned plenty of it. 60 years of it. Okay, so We're done with all the questions. Holy Charlie. That being said, you guys all have a great night. We'll see you all again tomorrow. Some of you I'll see in the morning. All right, so have a great night, everyone.
Good night.
All righty.
See you later, James.
See you later. Have a good night. End the meeting, and you guys here on YouTube channel 1, have a great night. Instagram, you guys have a great night. TikTok number 1, you guys have a great night. See you later. See you later, alligator. Dustin, whoa, I want to learn how to do it that. How to turn the computer off? Simple. There's a big X right there. I've been here since 9. It's almost 12. That's 3 hours. Have a nice night. If you want to come back, I'll be here again tomorrow. Out of here. And you guys over here, have a lovely night. See you guys tomorrow. Tomorrow, 2,800, 7,000, 2,800, 500. 20 over there. That's terrible.